Kind of a fun little quiz here that I threw together kind of quickly here, so there might be a couple spelling errors because I was never a great speller.
I like it.
So yes, my graduating class, we had a total of 27 people in that. So it was not the biggest class ever, but it was a great, that's a small town North Dakota thing. Janella and I have that in common. However, I just kind of want to touch on a couple things here. So like question number one, which previous job helped me prepare for my career as a mortgage loan officer? A restaurant GM, a bill collector, or a personal banker? So who thinks it would be A, a restaurant GM? Bill collector? Or a personal banker at U.S. Bank? A little bit of everything. Well, I was a restaurant general manager. In fact, I owned a restaurant part-time. I used to be the general manager for the old Ground Round down by the airport. I don't know if anybody remembers that restaurant, but it's 3 levels at about 70 employees. I could eat and drink as much as I want and weigh about 20 pounds less than this because I ran a ton. It was a lot of work. At that restaurant, I was there for about 2.5 years. One day I decided I am going to be out of this restaurant in 30 days. I don't care what I'm going to do. Picked up the paper, saw the ad for financial business, answered the ad, found out it's a job for a bill collector. Not the most glamorous job in the world. However, I committed I was being out of that restaurant, so I took a job as a bill collector. And not a pretty job, but what it did teach me is that everybody has a story. And honestly, it taught me how to just talk to people because everybody's a little bit different. I could find out if people really wanted to pay, they didn't want to pay, if they could pay, they couldn't pay, whatever their situation was. And I worked for a company called A. Miller & Associates, which was one of the biggest collection companies in the United States. And at this company, I was there for 3 years approximately. And I was actually collector of the month 4 times. I like to give these to my son as special awards because they're kind of cool. So, but it was a job that, it was very cool. And honestly, as bad as it sounds, I really did not mind it because I was on the phone talking with people all the time. So it was really a great learning experience. However, after 3 years, I got pretty old too. And I got recruited into the mortgage business. So the bill collecting was really what got me into what I'm doing now. And I look back, I wouldn't be successful at it now if I would have not gone through that phase. So question number 2, what kind of referral do I most successfully work with? Who thinks first-time home buyers? Who thinks retired people? Or how about both?
Both.
Yeah, both. First-time home buyers, I love working with those people. There's nothing more satisfying than actually watching somebody buy their first house. I mean, the thrill is unbelievable. On the flip side, retired people do a lot of transactions. They're either moving up, moving down. There's a lot of things going on that retired people do. So it's fun to work with them too because they're moving on usually to a final transaction of their life, and it's very special to be part of that transaction. So honestly, I love working with both of them. Number 3, who is not a good referral for me? Who thinks it would be A, a person with a bankruptcy in the past 3 years, or B, a current homeowner who is behind 3 months on their current mortgage? Yeah, it's B. I get a lot of calls. People are having, might be having some tough times. Well, if they're behind on their mortgage payment, really, because underwriting guidelines have changed so much, boy, you've got to be a really solid borrower to be able to qualify for a mortgage these days. So if you're behind, there's almost nothing I can do at this point until you get current, and you're current for at least 12 months. So, there's companies out there that do loan modifications. Honestly, though, most of the time it's really not a great situation for even those people. It's probably worth checking into, but the fee that they collect to help you get current, my experience tells me it's not really that great of a situation. So the best thing to do is just do everything you possibly can to keep current on your mortgage. So, when I'm talking with people and I'm kind of helping them counsel them on their current financial situation, I always tell them your mortgage is your most important bill to pay. Then it's your auto loan, then it's probably your credit card. So going back to my bill collecting days, they're going to let you slide on your credit card a lot more than your mortgage payment. That's why I had mentioned to you at one point, if no one thinks you're alive, skip a mortgage payment because they're going to give you a call pretty darn quick. Number 4, I like to network with A, B&I members, B, golfers, good or bad, C, new contacts at social events, or who thinks it's D, just about anybody. Yeah, it's just about anybody. And I put B on there, golfers, good or bad, and actually I met with Kelly and Sherry yesterday and talked about the golfing thing. It's like, I'm not out there just having fun. I love to golf, but really it's a chance to meet people and spend time with them. And really it's just a chance to them to get to know me, and me a chance to get to know them. So I love to network via golf. It's just it's a fun sport. It's competitive, but you get to have fun, and you can maybe even have a cocktail along the way. One. Number 5, ideal strategic partners include, or who knows my client before I do? Well, obviously real estate agents. I mean, they've got people coming in that need to buy a house. First-time home buyers typically don't have their mortgage or financial needs set up yet, so those are great referrals for me. So I can sit down with them, counsel them on the whole process. I have a list of mortgage do's and don'ts that I go with through almost every buyer, but first-time home buyers for sure, to let them know these are the things that you need to do to make sure you stay qualified. These are the things not to do between now and the time you buy or close on your financial transaction so that you don't disqualify yourself. Over 15 years, I've seen people that I have them pre-approved to buy a property. They go buy a car loan, all of a sudden their debt-to-income ratio is too high. We pull their credit, a week before closing, all of a sudden they have a new debt on there. Just, all of a sudden they don't qualify. So I mean, thank God it did not happen to me, but it did happen to a coworker of mine. So that's why I counsel my buyers, this is a do not thing, and I go through this list with them and make sure they understand that. Number 6, to be a successful mortgage loan officer, you must have what? Either A, a bachelor's degree in finance, or B, experience and a conscience. A? Yeah. It is. Actually, obviously it's B, it's experience. In today's mortgage environment, it would be tough to start out in this business because there's so many rules and regulations and so much change going on. And honestly, if you were buying a house, would you want to be working with somebody that's been in the business for 10, 15 years or somebody that's been in it for only 1? Because honestly, I've never seen so much change as we've seen in the last 6 months, year, 2 years, 3 years. I mean, we're in a constant change of flux here where the mortgage business had so much fraud, cheating, just a lot of bad things going on. Well, we've swung completely to the other side now where it's gotten completely, extremely tight. And so it's like they've eliminated the fraud, which is great. I mean, we needed to get rid of it. We needed some regulation. We've also incorporated some new laws, what's Home Value Code of Conduct, which is, part of it is good, but it's just the old pendulum thing. It's gone from too loose to too tight. Hopefully in the next few years we will try and find some middle ground where, we're probably where we should be, where underwriting is common sense and we're getting people loans that make sense for them. So, number 7, 3 words that I feel best represent me are either A, resourceful, trusted, and experienced, or B, retro, tough, and eloquent. So, obviously, I hope it's
I think all 6.
All 6? So, about 4 years ago, I sat down with this person and, we were talking about marketing, and the 3 things that I felt I was best at were being resourceful. Well, that's kind of out the window now because honestly, a lot of loan programs have gone away. So it's like if we couldn't fit you into this box, we find a different box for you. If you didn't fit into that box, we find a different box for you. Well, a lot of those boxes have gone away. So now it's really, we just try and get you qualified for the program that is available. And if you qualify, you do. If you don't, you don't. So there's a lot of people that don't qualify these days for different reasons. The credit standards have gotten tougher. No more stated income. Income now has to be documented for sure, one way or the other. And then, of course, everyone knows about the real estate values. Values have gone down. However, we do have programs where you can still go up to 105%. So, last thing here, final random notes and thoughts. Giver's gain. BNI to me is, I've been in BNI I think 5, 6 years, but it's, it is a great deal. I'm proud of the fact that I have my wife on board too. She's always asking me, who in your group will do this, or can do this, and can find it. So, that's one thing I'm very proud of. The last thing here is the Spare Key Foundation, which is a 503c nonprofit. 1% of my commission I donate to this Spare Key. It's financial assistance.